Are the pro forma rents, is there enough demand for senior housing in this area that you can justify doing the podium type development?
I think a lot of this makes sense from a location perspective.
No, but it'll just be like a work hotel. People who have business in town for one reason or another, and they're looking for a decent place to stay.
Sure, these land sites usually take a while to close.
If somebody does this deal, what could make it go horribly wrong? Real Estate Anonymous, Michael Gridley back. My microphone is working the best. I get to record the intro this week. Myself, Brett, and Elliot got to go through a deal that turned out to be relatively interesting, though I think our conclusion will not surprise you. It turned out to just be really freaking hard. And I think it was a great case study. When you look at some stuff, you're like, there's easier ways to get rich. And that's how we felt about this deal up in the Research Triangle, up in North Carolina. And we had a lot of fun up until the moment that Elliot's headphones died. Anyway, this is a podcast. We're making it happen. Hope you enjoy this episode as much as we enjoyed making it. Here it is.
Yeah, right.
That's a bad sign.
It didn't occur to me to log in under your name and pretend to be host with you in the room.
Hey, we got to save this $29 a month. We can't afford more than one account.
Right.
So,
yeah, got it. Well, maybe if Brett and I produce some better content, we could afford more than one login.
Well, let's not put the cart in front of the horse, as they say.
So, welcome in Real Estate Anonymous podcast. Elliot White, Brett Moss, Michael Gurdley, Eric Weatherholtz is out today.
An excused absence. An excused
absence. I don't know where Eric is, but I also have never seen Eric. You know the Dos Equis guy, the most interesting man in the world? I've never seen the Dos Equis guy and Eric in the same room at the same time. And so I have this working theory that Eric might actually be the most interesting man in the world. And I'm dying to know where he is today.
he just emailed. He was like, I have someplace to be.
Yeah,
that was it,
cryptic.
period.
Yeah,
Click send.
Exactly
right. He's either doing all and sitting at the house eating donuts and just doesn't want to get on, or he's like in, Azerbaijan on some crazy real estate mission with his wife. Yeah. Michael, where were you? Welcome back. You missed the past couple episodes.
Yes, I missed you guys.
All
so
good?
we spent a lot of business drama. It's been a year of business drama. So yeah, last week I was like trying to dial into the episode, and like people are like dealing with drama. So that was last week. But before that was the wife and I went for our 20th wedding anniversary to Barcelona. So we missed 2 weeks because we were eating tapas while you guys were talking about real estate.
Barcelona is incredible. Did you guys have fun?
We did. My favorite part actually was getting out of the touristy area. One day we went to Girona, which is like a cycling kind of mecca. Have you guys been to Girona? Do you know where it is?
I haven't.
I don't know that we were out there. It makes sense though that you went to a cycling mecca, but go ahead.
Well, it was kind of unintentional, but so you, in a very civilized manner, you can fly into Barcelona, walk out of the airport, get on a train, and 45 minutes later, you're like 60 miles away in a 100,000 person city. And it's a medieval city, but it actually became the mecca for professional cycling and like the mecca for going to visit as like a cycling tourist because of an interesting phenomenon. And when Lance Armstrong was basically winning all the Tour de France stuff, he moved his family to Europe, and he decided to pick a place to be. And he picked this place in the coast of Spain, north of Barcelona, bordering France, and Girona was the city. And so he moved there, and then suddenly like all the other professional cyclists moved there, and then suddenly all the cycling tourists went there. And that's how Girona basically became like the mecca for cycling in Europe.
Did he pick it
just
because
like bizarre.
It's just sort of a beautiful place to live, or did he pick it because the topography lends itself to Tour de France training or something like that?
So you have this awesome kind of combination there. Like there's not a lot of traffic. The locals are all Catalans, so they're not Castilian Spanish like the folks in Madrid. So they actually consider themselves like their own country. Mm-hmm. They're very welcoming to foreigners. Like if you show up, they're just like excited that you're there. Like my wife and I would go into coffee shops, and I had like delightful conversations with people. And I'm speaking Castilian Spanish, so like the Madrid Spanish. And these people are all Catalan, so like they're speaking a second language too to me. And but they're all just like, so the roads are perfect for it, the weather's perfect for it, and the people are just like super welcoming, unlike other parts of Europe where you don't feel that welcome, like Switzerland.
Well, I'm assuming if Lance Armstrong set up shop there was less stringent protocol on doping easier to get performance enhancing drugs, even though we're going to deny it for a little bit. And I don't know if you guys saw that documentary Icarus a few years ago, but that was an unbelievably good documentary in my opinion. That took a turn that I did not see coming.
Brett, we were having a nice morning talking about the beauty of Spain and the wonderful people that Michael spent time with. And here you go, just talking shit about PEDs.
Well, I mean, that's totally something you would do, Elliot. So I'm just trying to be more like you.
That I would take PEDs or talk shit about PEDs?
Both. I think both.
both. Cool. Great.
You would talk shit about PEDs after you started a few cycles, I think.
Yeah, that's exactly right. Okay. Well, that's certainly the vibe.
I think we've determined this is a drug-friendly podcast. We're open to all kinds of lifestyles.
We're open and affirming. We're an open and affirming.
I thought we were going for a more family-friendly vibe, but I suppose this will work.
Oh man,
Brett.
Yeah, playing my own podcast for my kids, and they're like, "Dad, why do you use the F word so much?" Like, I don't know. So I'm trying to get my point across.
Have you played this one? And do they ask who's the guy who gets beeped out all the time?
Pretty much.
Yeah.
So we got a deal. We gonna do this deal?
Yeah, Brett's got a deal we're going to talk through. It's a development deal.
Nice. Are we doing intros? Are you going to be following the rough outline to kind of maintain a little bit of structure here before it goes off the rails?
Yeah, I mean, I'd like to hear. I'd like to hear what's new what's new in your week.
New in the week. I think the interest rates higher for longer sentiment is finally starting to set in with some folks, and Elliot and I have had some spirited dialogue about this over the last 18 months, I'd say. So I think for the first time in the last, since interest rates went up, there are certainly some pinch points on the capital stack, i.e. lenders are going to force people to sell, or equity is going to force people are running out of time. And I think that the balance of this year is going to be awfully interesting. There'll be some big winners and some big losers, but that's the way that the story goes.
Yep. What do I got? We finally hired a head of asset management, wonderful woman, tons of experience, unbelievable person. Really excited to have her on the team. She starts, I don't know, 3-4 weeks from now, but very happy about that. And then yesterday, I offered a guy $13,000 per unit for his apartment building. I still got it. He paid $25 million for it and then proceeded to run it into the ground. And now it's losing $2 million a year. And I explained the concept of negative economic value. And I offered this fucking guy like $2.5 million. And I thought he was going to tell me to go. And all he said was like, yeah. And that was it. And so we'll see. But I think if you can pick up a deal built in the early 2000s for $13,000 a door, you do it.
Maybe that's a deal we talk about when it's all said and done, once the dust settles.
Yeah, we'll see. We'll see if it materializes. All right, let's get into it here. I'm dying to hear. I assume Michael's real estate deal that he's been cryptically talking about since we started the podcast is still nothing. I assume the day that it becomes real, we'll hear about it. So unless that's real, put your hand up. We're going to jump into talking about this deal.
It died a horrible death.
That sucks. Well, any consolation, every deal dies at least twice before it's truly gone. So it may come back around.
It sounds like a real estate deal.
Yeah.
There's some good content there, but it died a horrible death. Okay. So
I'm sorry to hear that.
Throes of 3 years of work. What's a big deal? 3 years of team friends. I'm curious to learn about this one, but maybe this is not the forum. No, I think it'd be a good podcast episode at some point. Okay. So we could do it in the future one, but we should do one of the deals.
We just do one focused on your misery. That'll be good. Audience will love that.
What's the term? Schadenfreude? Is that the term? Taking pleasure in others' misfortune? That's a boarding school term.
Yes.
I didn't go to boarding school.
Good.
Just a product of Orange County, Florida's public school system.
I'm getting through like all stages of grief, so I think I'm pretty close. Do I sound like I'm in acceptance at this point?
Yeah.
You come to your reality.
Yeah.
Mm-hmm.
Yeah.
So.
All right. So should we put the deal we're going to chat about this week up on the screen?
Yeah. Let's talk through.
Is it this Cavernous one or a different one?
Yeah, it's Cavernous. I was calling it Cavenous, but that's probably not right. Cavernous. It's in Wake Forest or Raleigh. It's near Wake Forest, right?
Correct.
It's in Wake Forest.
The address is Wake Forest, so I don't know. I'm going to call it the Raleigh MSA. Is that fair?
Yeah, that's fine. And it does,
Fair.
it could be, I get that cavernous is probably correct, but it's spelled cave-ness. So,
Yes. And I went to college with a guy whose last name was Cavanis, and they were big cattle farmers up in Amarillo, which I know everybody on this week's episode is super interested in that part. But as we wade in here, so this is a 21 acre vacant parcel in Wake Forest, North Carolina. I don't know if people can see that very well on the screen there. But you've got, looks to be a very affluent and dynamic interchange where you've got zoning in place for 260 residential units and a hotel pad with what looks to be adequate parking here. So I think that the one thing in chatting or in reviewing this up front would be the fact that Sam's Club has basically carte blanche approval into whatever goes in around you. And so that would be a little concerning from my perspective. But few things to unpack here. I would say that again, I take a lot of stock in grocers and the retail users. Excuse me, in the immediate area here, and Wegmans, we don't have those in Florida, but I think those are very well thought of. And I think the grocers are doing more demographic research than anyone. So if you see a grocery store going into a place you're scratching your head about, I'm a big believer that wait 3 to 5 years and it'll be pretty evident to you why that grocer went in there. So you've got a 11-acre retention pond that you're responsible for servicing. So I think we can talk about that in a little bit more detail. And call for offers on this was April 3rd. So I think the team at the shop that's marketing this knows how this one shook out. But land is not easy these days, as we know, as we talked about in some prior podcasts. So, I think with that, maybe kick it over to Elliot and maybe talk about the market in general, and then kind of how you're thinking about new development, which I know we've touched on a few times in this podcast. I'm going to go over to PDF here just to see if it's.
yeah, I'm trying to find out exactly where this is. I can see it on the offering memorandum, but are we on kind of Route 1 and Highway 98? I know we're north. I'm just trying to give people some bearing as to where we are.
Yeah, let me.
So while we're doing that, it's 21 acres. There's 11 acres, so it's undeveloped. It's zoned conditional mixed use, which means I guess they want age-targeted multifamily developments only. And age-targeted means like only like seniors or like,
yeah, it's probably 55
what does that mean?
plus.
55
plus.
Yep.
And most developers are doing that just to save money on the school impact fees, is my understanding of that. Elliot, is that yours as well?
It's a little of that. It's also easier to get that approved. People,
Right.
whenever you propose new apartments, there's always all this sort of boogeyman stuff. And, oh, the school system's going to be overrun. I don't want these families and they're noisy. When you come out and say we're doing senior living, even for the just dumbest sons of bitches who show up at city council meetings and yell about whatever's on their mind, racist parking meters or who knows, even those people have a hard time complaining about senior apartments going in. And so those tend to sail through approvals pretty easily.
And then there's out of the 21 acres, then there's 11 acres of it that is just basically a pond for all the stormwater. So I can't build on that. So I get 10 acres to build on here, and I pretty much have to do a 55 plus multifamily.
Yeah.
That's my lane here.
Yep.
Okay.
So 10 acres to get a hotel and a multifamily deal developed on it seems a little tight to me. What about you, Elliot?
Yeah, it is tight. That's definitely tight.
And so I think to unpack that a little bit more, you're going to have to do some sort of structured parking, would be my guess on this apartment site to make the site feasible. But I don't really understand that with the amount of parking that's there too.
You're not dealing with a square. Like there's like this weird oddball, I guess, and maybe that's the stormwater retention pond, this thing right next to the Sam's Club.
Yeah. All right. So
you're expecting people to come off the highway. Yeah.
I know where we are. Let me give some bearings here. So we're northeast of Charlotte, this site.
Or Raleigh, right?
Sorry, northeast of Raleigh, not Charlotte, northeast of Raleigh. We are also coincidentally northeast of Charlotte, but that's the wrong bearing.
Yeah, that's true. That's fair.
That's not nearly as helpful. So you're maybe a half hour outside of the CBD. This is an affluent area, but when you look, so we're on Route 1 North, right before you hit Highway 98. Forestville area, Wake Forest, that part of town. And when you look around at all of the surrounding multifamily, it's all pretty much garden style stuff. It's 2, maybe 3-story walk up. You don't see a ton of podium wrap product here. It tends to be expensive to build, and you tend to build that stuff when land is tight. And so then the question is, well, are the pro forma rents? Is there enough demand for senior housing in this area that you can justify doing kind of a podium type development? And I honestly don't know enough about this market to tell you whether that's true or not. But that's kind of the first question: is you have a small site with a limited target demographic, and to make it all work, you've got to hit a rent that's, let's say, 20% above market rent for whatever a family would pay. And seniors will certainly pay a premium to not be surrounded by families. So I'm not saying that line of thinking is incorrect. That's the path I would go down to try and find out if this is viable.
Yeah, I agree with that. And again, I think the structured parking comment there would be you've got to build some sort of parking garage, and then you're usually wrapping units around the parking garage, which just gets, I mean, my back of the napkin on a parking garage expense is about $15,000 per unit.
Yep. So I'm looking here. They're proposing 2 4-story buildings with surface parking. So I'm looking at the site plan here. They've got kind of your main building with clubhouse and leasing. They're targeting 260 units total. So it's going to be 150 units in the main building. And then they kind of have an out building across some parking spaces. That's an L shape that they're going to have another 110 units. And then it looks like they've also carved out part of the site for a hotel. I don't know if that's because it's a mixed use overlay, or if they think hotel is accretive here. The best case scenario, I think, for a hotel in this part of town is you're going to get something like a Home 2 Suites, or a newer Marriott Courtyard, like a nicer work hotel. I don't think you get anything other than that to pencil out here. Seems tight for a 10-acre site, but what the hell do I know?
Yeah, and I guess kind of the other somewhat confusing part of this for me is that if we could scroll back to the site plan here, the town, so it looks like building B, so down here is 2-story townhome units with flats above, which I'm a little confused about that. Not that that really matters, but it does look like there's, again, circling back to the concept of surrounding uses. Again, looks like demos in the area are very strong white collar workforce, which is what you're looking for when you're contemplating, or what a lot of groups are looking for when you're contemplating new residential development. So, I mean, I think a lot of this makes sense from a location perspective. And you've got obviously 3 or maybe 4 maybe Wake Forest isn't Winston-Salem, but you've got University of North Carolina, NC State, and Duke, which are all, within, I think, 10 miles of here. So I think from a demand standpoint, whether it's students or users, and again, the research triad is what this pocket of North Carolina is referred to. So you've got some very, very high end jobs, I guess, for lack of a better term, a high educated, employment based, population based. So I mean, I think from that perspective, today that checks a lot of boxes. And I don't know, Gertley or Elliot, if you've got anything to bolt onto that, or if you feel differently.
Yeah. When I'm looking here at the aerial map, so, and I'm on Google Maps here. So if I'm looking at the site, right around me, you've got Sam's Club, you've got kind of the retail you would expect along a major highway, you've got some restaurants and shopping and those kinds of things. But if you zoom out, I don't know, 5 miles, 10 miles, there's seems to be some pretty affluent, there's some bigger homes around here. And the thing that is always interesting to me, and I don't know the ratios of really what you're looking for, because we don't do specific senior housing. We own some, but it's really just sort of independent living. But we don't develop senior. And the pitch seems to be, okay, you grew up in this neighborhood, you raised your family in this neighborhood, you did whatever, but this is home. Your kids have moved out of the house. You don't need the 4,000 or 5,000 foot house anymore, but you do want to be near the neighborhood that you know. You want to be near your friends still. You don't have to move that far away. So a specific senior living community like this could actually work out quite well.
Yeah, I totally agree with that.
How does this Sam's Club like right of approval seems kind of odd, and navigating that? I don't know. I'm just like, is that normal? It seems weird.
Yeah,
let's unpack
that's
that
normal. Weirdly enough, I've done these deals before. Big anchor retailers, Dick's Sporting Goods, Sam's Club, we're talking major users where they're the draw to that center. If the owner of the land, obviously they can't control land that's not owned by the same owner, but if one owner, typically an owner will have a big piece of land, they'll start to carve it up. And so they think apartments here and retail here. Those big tenants ask for just a blanket right of first refusal. Sometimes they get veto rights. Sometimes they have control over what gets built. It's really only to stop, like Lowe's will do it to make sure that Home Depot doesn't come in across the street. Sam's Club would do it to keep BJ's from coming in across the street. Like they want to make sure that what is going in next door is a complementary use and not a competing use. They're a bear to deal with because they're big corporations with a legal department. So it takes a minute even just to get the apartments approved. It's a bit of a thing to get them to say this is fine. But I have never heard of any one of them saying this is not fine. It's just kind of one more thing you have to deal with. That could be slightly different here for some reason, but that's how I've seen these play out.
Okay, so I can't put a fireworks store here. Check. Got you.
Well, the worst they're going to say is no, Gurley. I mean, you've heard that before, right? Probably in the fun business stuff last week.
Yes.
Thanks
for bringing that up.
But going back to the well, no problem. Sore subject. So we'll move on.
Thanks a lot.
But I would say that we touched on this in some prior podcasts. The development game isn't easy right now. So where I think there's another layer of approval or there's some added risk here from a capital perspective, the people that would be providing equity to the development, I think you'd be looking at other sites with one less variable or risk factor in it in today's environment, with just as tough as it is to make the math work on most all of these development opportunities.
So the call for offers was April 4. Is that right? So that was a month ago. Yeah.
April 3rd. So we're 30 plus days beyond that.
I was curious, did it end up transacting, or are they under contract?
I'm not sure. These land sites usually take a while to close too. Obviously, you've got this site plan approved, and that's kind of a double-edged sword in a lot of ways too, where the developer would come in and have to be beholden to the site plan or go get an amendment to the site plan that's been approved.
I'm trying to think what this would trade for. You got 260 units plus hotel. I mean, I'm sure right now people are trying to keep their land costs maybe 10 to 15% of total development costs, probably closer to 10 if they can. It's probably worth a couple $1,000,000 for sure if you believe that there's demand. And I think there's probably demand for some senior apartments here. I don't know if there's other competing senior apartment communities, but it doesn't sound like a crazy pitch. It'd be hard for me to put a number on it without really digging into the rents, but.
And I think kind of high level here, these age targeted deals or active adult deals, which are again 55 and up, tend to get much higher rents than conventional or traditional multifamily in the area. So that might provide a little bit of boost here. And I think having 150 units, which I think was what the number was there, or 160 units, I like that deal size in today's market, and bringing it back to the active adult dynamic. Those deals tend to lease up a lot more slowly, than a conventional multi-housing deal. So I like the unit count a lot here too, just on the active adult portion.
So who does this deal?
This is going to be a local builder. Got to be. It's someone who knows this market pretty well. It's probably, you have a local builder, and then it's enough equity. They're probably going to bring in an institutional JV partner, like sort of what DR Horton does or what Rangewater does or some of these other folks do. They build nice communities with an equity partner. They get to 70, 80% stabilized and sell it off. It's a merchant builder, I think. And no one's going to build a whole that I could see.
I agree.
And is that builder we have here in San Antonio, there's a big real estate private equity firm that's been around for a while that does this type of stuff, rinse, wash, repeat all across the Sun Belt. That's what you're talking about? That'd be somebody like that?
Yeah, it'd be someone like that. Yep.
Yeah. Interestingly enough, the biggest of those real estate private equity guys that do multifamily and focus on it here, they're one of their biggest LPs is actually the grocery family.
Really?
Yeah.
Oh, the HEB guys?
Yeah.
Yeah, HEB is a machine down there.
Yeah, it's a cool concept. I went into one earlier this year, and it feels like a mix between a traditional grocery store and a Sam's Club or a Costco.
All right. So
yeah, when with HEB, when they basically ran Albertsons and all those guys out of Central Texas and Northern Mexico. Like they just basically ran them out of business. When I was a kid, we had Albertsons here in San Antonio and in Austin. And then HEB just ran them all out of business. And all those former Albertsons are now HEB. So for a while, there was only HEB was your only option. And then when Walmart showed up, HEB went really hard and aggressive against them and started to open up super centers to compete. And a lot of the reason they do so well is because they're privately held. The family and everybody thinks very long term, and they're willing to run at lower margins than other grocers are, and so they just crush. It's just super admirable.
Let's do a rough approach here. Let's say you got 260 units, and what do we think the average stabilized rent here? Maybe 2,000 a door. We're just guessing here.
Yeah, 2,000, 2,500, something like that.
All right, so let's say we'll split the baby. Let's say it's 2,200. So you got 260 units, bringing in 2,200 a month. So you got 572 in monthly operating income, potential operating income. There'll be vacancy and things like that. But so you got 6.8 million a year in potential gross revenue. Let's assume you run a 40% expense margin. So now you got about 4 million in NOI, possibly.
Mm-hmm.
And we're going to say this stabilized trades around a 5.5 cap. So this gets built out, trades at a 5.5. Maybe this sells for 70 to 75 million, including the hotel, as sort of the all-in number. And so you're wanting your land cost to be, if you can, maybe 10% of that. I think land cost is tricky in this market. So this site looks to be fully entitled. All these uses seem to be as of right. I know there's some note in the OM about you need to bring in higher capacity water and sewer. So that's $1 million. So if you're trying to hit 10%, maybe you're paying $7 million for the site. You back out the $1 million in water sewer improvements you need to make because it's not really ready to build. And so maybe this thing trades for $6 million. Somewhere in there, 5.5 to 6 million.
Feels about right.
I mean, we made a whole bunch of assumptions there, but I don't think there's any scenario it's trading above 10 million. I'd be curious to see how this, I don't know any of the folks at CBRE in this market, but I'd be curious to see how this trades.
Yeah, and I guess we probably could use Eric for his co-can analysis, what the hotel's worth, but it seems like hotel development has gotten some legs over the last few years where COVID certainly threw a monkey wrench in the hotel industry in a big way, but it does seem like there's some good tailwinds in the hotel industry today. I just probably can't speak to the demand side of the equation, but I do agree with the brand assumptions that Elliot made earlier. I mean, it's probably a more kind of budget conscious or kind of an A-Loft or an AC Marriott that is used here. It's not going to be a Four Seasons. I don't think by any stretch of the imagination.
No, but it'll just be like a work hotel. People who have business in town for one reason or another, and they're looking for a decent place to stay. You're probably talking 130 to 150 bucks a night for a room there. It's my guess. So it's not going to be a Super 8 or anything sketchy, but it would just be kind of a run of the mill, work hotel. I think that's fine.
The air conditioning works and the bed's relatively comfortable.
Yeah. Also, who was the guy who figured out that you could put the water control knobs on the opposite wall from the shower head? Whatever hotel figured this out first, guy deserves a raise, because you now don't have to like wedge your ass into this shower and deal with the cold water. You can just stand there like a civilized person and control the temperature.
It doesn't seem that hard, but it did take folks a while to come up with that, whether it was in your house or in a hotel.
Yeah, and the other shocking innovation in the world of plumbing is that years ago, when you had one of those, you had to turn the handle and you had to turn around like 2.5 fucking times to get to the heat that you wanted. And then someone figured out, well, we could just have a 90-degree gate valve. And so you can just turn the handle a normal amount and get some range of hot and cold water.
Versus just turning it perpetually and hoping to find the
right.
Getting scalded or freezing to death. It doesn't seem like we're launching rockets to the moon there, but I agree. Keep it simple. Set people up for success.
On my last trip to Florida, the hotel room I was in did not have hot water, and I was running late for a meeting, and I got a quick workout in, so I was sweaty. And so I just stood there in this miserable, depressing business hotel outside of Tallahassee, I think, taking a cold shower, thinking to myself, what kind of fucking life have I chosen?
Well, it woke you up. If the workout didn't wake you up.
Yeah.
So what if somebody does this deal, what could make it go horribly wrong?
Lots of things. I mean, land development, I think, is probably the riskiest position to be in. You can make a pile of money, but it can go to zero pretty quick. You've got sounds like it's all permitted use by right, so you don't have to deal with the zoning board. There's still going to be design approvals, I'm sure, but that's a little less contentious. But you've got design review, and then you've got to make sure construction costs don't go crazy. You've got to make sure interest rates, because your construction loan is probably going to be a floating rate loan. So if interest rates spike back up, if construction costs go up 15% and the cost of your debt goes up 15%, you're in a pretty tough position to be in. Ideally, you want to be, if things are going to trade at a 5.5 or a 6 cap on your development, you'd like to be stabilized above a 7% yield on cost to make it all worth it.
Right.
I don't know how achievable that is in today's market.
That's tough. I mean, construction costs, there's been some relief on construction costs over the last couple of years, but I'd say 10% at most, which doesn't really move the needle in an overly material way. And we've talked on the podcast before about valuing land and certain redevelopment opportunities, new development opportunities such as this one. And a lot of people are kind of say, well, just, lower the land price from 25 a door to 20. I mean, the land cost or component of the development budget is so de minimis that the land cost could be, the land seller could pay you $5,000 a door here to take the site off their hands. The math still doesn't work on a lot of these opportunities just based on the construction costs. So you've got the site's been cleared and rough graded. You've got a variety of users and development in the adjacent and surrounding areas. So I think you could have a little bit more confidence in the site conditions there, where you're not going to have a giant budget bust because you run into non-organic soils, or I think in this part of the country, you run the risk of running into some significant rock or stone issues if you get a blast out, which is never good. In Florida, you just have sand everywhere and swamps, so it makes it a little easier.
This definitely feels like one of the deals you just only want to wade into if you feel like you have, a specialist advantage in it. Kind of the merchant builder profile we were talking about.
Yeah, this one's not for the faint of heart.
So I think one of the things from the valuation exercise too, that we're just kind of putting a 5.5 cap on the NOI that Elliot sketched out there. Hotels typically trade at a much higher cap rate. I think those are 7 to 8 today. So there's probably some sort of blending there, which then drives the cap rate higher, which just kind of makes the math a little bit harder to work if you're kind of saying we're trying to get to a 7% unyield or yield on cost going in there. So I think that gets a little dicey when you bifurcate NOIs from both the hotel user and the multifamily user. So another wrinkle here, which doesn't make things easier if you're coming into this. And I would say there's very few groups out there, developers, that can develop hotel users or hotel use and a multifamily use. Bringing two development shops here would be too many cooks in the kitchen based on today's environment.
I don't know that I've got a ton else for this one here, gents.
Yeah, my first reaction was, well, nice to talk about this one. Seems like somebody else should do it. It seems like it's on the too hard bucket for sure.
Life is too short.
But it maybe would warrant a trip to northwest Arkansas to visit the Walmart family, the Walton family, which is an incredible part. I mean, I've been there; it's beautiful there, and Walton family's doing some really cool things there. I would totally go back and think that whole part of the country is maybe a hidden gem out there.
Oh, for Bentonville? Yeah,
for Bentonville, yeah.
Yeah, we found one small town downtown in America that the Walmart family didn't kill, and it's the one in Bentonville. They killed everybody else's small downtown.
They've been great stewards to that community. I mean, with all the biking trails and that Crystal Bridges Museum.
It's amazing.
It really is.
Yeah,
I'm sure that's true. Walmart has realized that they don't want their town to get taken over by Walmart.
Yeah, they killed every downtown in America except for that one, the one where they live.
I'm sure the family that built Dollar General doesn't have a Dollar General in their town.
Probably true.
The other thing that's crazy about Bentonville is like it's a great place to go for a long weekend and go cycling, but then you realize there's really only 4 restaurants in the town, and after you eat at all of them, you're like, I gotta get out of this place. It's really small. So
it reminds me of like a ski town east of the Mississippi River, or is it east of the Mississippi River? It has a kind of a ski town vibe, a small ski town vibe. I fancy myself as being good at geography, but I'm not sure. Yeah, I guess it would be.
It's west.
Yeah.
Yes. Yeah.
It's
I
West.
stand corrected. Elliot was going to call me on that. Justifiably so.
I don't have anything more to say about this deal. Yeah, it's fun. I hope somebody braver than any of us should go do this one.
Right. Since we're in this part of the country, we'll go with the Dabo Sweeney quote, which is "Bring your guts," which I think is what he said in some post game press conference, which has gotten a lot of run. But I'm with you guys. I mean, it seems like there's better opportunities out there to pursue, just given all the moving parts here.
As my grandpappy said, I think there's easier ways to get rich.
Right. Right. But I think all three of us are willing to go to Bentonville to hang out for a night or two. First Fish concert back after COVID was there. Wouldn't be a podcast without having a Fish reference.
I thought we covered you're a little yachty guy. What's going on here? All right, I'm going to click stop before we dig a little deeper hole.